Hi, I wanted to walk through the Exam 1 review. As you know, the exam's coming up. It covers chapters 1 and 2. You need to concentrate your studying on the items that are on this review. There are a few things in the chapters that you will see on Exam 2, but not on Exam 1. So let's just kind of go through it. You need to know your debit credit rules, which accounts have normal debit balances, and which accounts have normal credit balances. So those that have the normal debit balances, as you can see below on the review that we're going to look at in a few minutes, the normal debit balances are going to be assets, and they're going to be expenses and dividends. Normal credit balances are going to be liabilities, common stock, and revenues. You might have a listing in a question that gives you 3 or 4 accounts, and you're asked to identify the one that has a debit balance, or which one has a credit balance, or which one does not have a debit balance, or which one does not have a credit balance. So you need to be able to look through the accounts, know what type of account they are, and if they have a normal debit or credit balance. You need to know the journal entries. We've covered quite a few in the homework problems. There's some in the PowerPoints, there's some in the homework that was assigned, and there was some of the class exercises that you can find in the learning modules in Blackboard under Unit 1. Some of these are repetitive, but you need to go through them and be familiar with them. What's going to be your debit and what's going to be your credit. You need to know the effect on the accounting equation for the different transactions. For each transaction, for example, is it increasing or decreasing assets, increasing or decreasing liabilities, or increasing or decreasing equity? As you know, several of our journal entries involve cash. So for example, when cash is paid, is this a debit or credit? The answer would be a credit. So remember, when cash is being received or it's coming in, it's increasing, that's going to be a debit. If cash is being paid, it's going out, it's decreasing, that's going to be a credit. What does a debit mean? It just means the left side of the T account. What does a credit mean? It means the right side. You need to know the definition for a chart of accounts. So remember, every business is going to have a chart of accounts. So this is just going to be a listing of the accounts with an associated number that they use for their journal entries. Many times they'll have the assets, liabilities, equity, revenue, and expenses. So for example, all of the assets might be the hundreds, liabilities might be the 200s, etc. You need to know when revenue is recognized. So per the revenue recognition principle, revenue is recognized when it is earned. So if we have provided the goods or services, then we have earned the revenue and we're going to record it. It doesn't matter if we are receiving the cash at this point or not. You need to know the definitions of revenue. So that's when we have earned and provided goods or services. An asset, which is something of value, a resource to the company, so be able to identify your assets. The accounting equation is how we record the business transactions. It's double-sided entries. The accounting equation is assets equal liabilities plus equity. Dividends are when we give money back to the owners. It's recorded as a debit. And common stock is when the owners invest in the business, and that's going to be a credit. You need to know if the accounts are assets, liabilities, revenue, expenses, or equity. If you need some practice at this, you might go through the accounts that we covered, starting with Chapter 1 and into Chapter 2, and just make a listing of them under the different categories, so you can kind of start seeing what type of accounts they are. You need to know what's on each financial statement. So for example, for the income statement, it's revenue minus expenses is net income. The statement of retained earnings, we start with beginning retained earnings plus net income minus dividends to end up with ending retained earnings. On the balance sheet, we're going to have all of our assets, we're going to have all of our liabilities, plus our equity. And it's going to show that our assets equal liabilities plus equity. You need to be able to calculate net income from a trial balance. So if you look through the slides and through the book, you'll see that a trial balance is in chart of account order. So those items that you need to calculate net income are going to be toward the bottom. Revenues are going to be credits and expenses are going to be debits. You need to be able to calculate stockholders' equity. So for retained earnings, it's going to be beginning retained earnings plus net income minus dividends is ending retained earnings. You're also going to have any common stock listed on the balance sheet. You need to know the names of the financial statements and what they report, as covered above. You need to know that the income statement and statement of retained earnings are for a period of time. So for example, for the year end, so it's going to show the revenue and expenses, retained earnings for that period of time. A balance sheet is for a point in time. It's going to have one date and it's showing the balances on that date. Now this is one of the most important slides and it's really covered above, but just so you can visualize your accounting equation. Assets equal liabilities plus equity. Debits are always on the left. Credits are always on the right. And the green arrows are what is the normal balance for those types of accounts. As we discussed for equity, debits are going to be dividends and expenses. Credits are going to be common stock and revenues. Now next you have a listing of accounts and you're asked to identify what type of account they are. So you're going to go through here and note if they're asset, liability, equity, revenue, or expense. Then you have the same accounts again and you're asked to identify if they're increased with a debit or a credit and what their normal balance is. Whatever increases them is their normal balance. And I have also included the answers so you can go through here and kind of test yourself if you want to see which ones you're understanding and which ones you need to practice or memorize. And then you can go and check your work here. That pretty much covers what's going to be on on the exam 1 for chapters 1 and 2. I would also encourage you, if you feel the need, to go back and rewatch the videos that were assigned for homework. Some students also like to go and rework the homework, so you can do that. In the learning modules and Blackboard, there's also the demonstration videos that walk through and discuss certain exercises for more practice. There's additional study resources that have extra problems with the solutions. And also in Connect, if you scroll down to the bottom of the homework assignments, there's an exam 1 optional extra practice. This one has some different listings of accounts, for example, so you can test yourself, as well as it might have a few questions that show you how the test questions might be structured. The test is going to be 25 multiple choice questions and you're going to have 50 minutes. Email me with any questions and good luck.